I'm a tax attorney, and I'm going to give you the key 9 most important tax tips that if you follow for 2024, you'll be able to maximize your tax position and hopefully reduce your taxable income considerably. And here's just a taste of what this video is going to teach you. For example, Roth conversions, $3,000 capital loss option, charitable deductions, going solo if you're self-employed. What about Trump? What does that mean for your tax position in 24 and in 25? So keep watching, and I'm going to spend the next 10 or so minutes giving you everything you need to know about how you can maximize your 2024 tax position from a retirement and income tax position. I'm going to try to keep this as short as possible. I know everyone's busy year-end Christmas shopping or holiday shopping and holiday parties and doing a lot of good stuff, but there's still time to maximize your tax position in 2024. So this is stuff that I do and that I talk to my clients about that I think all of you could also potentially take advantage of. So number 1, max out your 401k. You're potentially getting free money. If you work at a business, okay, whether it's IRA Financial, Apple, Tesla, you're probably getting at least a 3 to 4% match on your salary. So if you make $50K and the company does a 3% match, you get a free $1,500. The problem is some of these companies require you to put in at least 3 or 4% in order to get that match. So in order to get the free money, you need to put in the money. So remember, put in at least the 3 or 4%. If you can do more, max out. That's how rich people get rich. It's called deferral, compounded returns. Your money grows faster without tax. Rule 72, 9% rate of return. If you can average that, every 8 years your money doubles. So this is a great opportunity. You still have time. Go to your employer, HR department, and see if you can put in a little bit more money, whether it's pre-tax or even after tax, into a 401k. Number 2, if you're self-employed, you still have a chance. You can set up a solo 401k for 2024. In 24, you can also do it in 2025, thanks to Secure Act 2.0. So don't freak out. But if you have a C or S Corp and you want to set up a solo plan, in order to get employee deferrals, which allows you to go up to $23,000 or $31,000 if you're over 50, you need to get that plan set up by 2024. So you still have some time. Again, self-employed, you have a sole proprietor, an LLC, C Corp, S Corp, no full-time employees other than you or the other owners, consider going solo. 3, Roth conversions, right? Do you want to take your pre-tax money, convert it to Roth? Could be a great opportunity. Now, of course, you want to be able to pay the tax on the conversion since it's ordinary income tax due on the conversion, but there's all these great strategies where you can take into account depreciated assets, assuming anything has gone down in 2024, right? It seems like everything's gone up, but there may be an asset that you own, whether it's a stock or a piece of real estate, in your pre-tax IRA that's depressed in value. Well, this may be a good time to convert it and pay tax, get it into a Roth. Why do you want to Rothsize it? Once you're 59 and a half, Roth's been open at least 5 years, it's all tax-free. So consider Roth conversions. They must be done by December 31 for the 24 year. If you're a client of IRA Financial, we will make sure that gets done. 4, $3,000 capital loss. So this is something we all should be looking at because you have the opportunity, if you have any capital losses, to use up to $3,000 to offset ordinary income. So it's a great way to use a capital loss to offset ordinary income, but you are limited to $3,000. So everyone should take advantage of it, whether you're a millionaire or just a regular worker like you and me. We want to be able to take advantage of that capital loss opportunity. Number 5, harvesting losses, if any, right? When I say if any, Bitcoin's up 150% this year, Ethereum's up 100%, everything seems to be up, right? I don't know anything that's down. But if you do have some assets that are down, considering potentially selling them, getting the capital loss, and then you can buy it back if it's stocks within 30 days. Okay, so get the loss in 24, use it to offset other capital gains or take advantage of the $3,000 capital loss to ordinary income, and then you can repurchase that equity in 30 days. So that's something, again, to consider if you have any losses. If you're over 73, number 6, remember RMDs. Require minimum distributions. If you're over 73 years old or you have an inherited IRA from a non-spouse and you have to take RMDs, work with your IRA administrator. Generally, you have until 12/31 to do them. and they will help you calculate how much the RMD is. Just something to keep in mind. 7, Trump. Okay, what does that mean? Well, we have inauguration January 20, 2025. What can we expect? Well, we can expect taxes to kind of stay the same, maybe even drop a bit from a corporation and capital gain perspective. There's some chatter that the itemized deductions, the ability to deduct state and local taxes, as well as some other accelerated depreciation opportunities may come back to life and may accelerate in 2025. So just be aware of it. It's nothing you need to do now in 24, but you should be aware. Obviously, there's been a huge run up in the stock markets and the crypto marketplace since Trump won the election. So it's just something to keep in mind how that's going to play. We can expect taxes to stay the same, if not drop. So there should be a very robust business-friendly environment and also a very investment-friendly environment for 25 and beyond. So, just some good news, whether you like Trump or not, there is the anticipation that it will help the economy and the investment environment. Number 8, charity, right? It's one of the best deductions you can get, right? You get a deduction for making a contribution to a charity as an individual. And what does the deduction do? It reduces your taxable income, right? If you make $50,000 and you give $5,000 to a charity, you now pay tax on $45,000, okay? Plus, altruistically, you did a great thing because you're giving money to a charity. It's hopefully doing great things. So you kind of get a double benefit. You get the tax deduction. You also get to do really good things with that money. So consider that. It has to be done by 12/31. You can donate appreciated stock, right? So let's say you bought Apple at 100, now it's worth 200. You can donate the stock and get a tax deduction for 200, and this way you can escape taxation on the gains between 100 and 200. Nice way to give money to a charity. Consider setting up a donor advisor fund, right? This is a great way to set a lot of money aside. Maybe you have a lot of Bitcoin this year, right? And you have hundreds of thousands of dollars of gains. You can set up a donor advisor fund, dump a bunch of that money into a fund that you control. You don't actually have to make the charitable allocations. You just need to make the donation to the donor advisor fund that you control. And then from there, you have future years to make the actual donations to charity A, B, C, or D. But you can lock in that deduction for 2024. And again, with donor advisor funds, you can donate stock, private assets, obviously cash. So you also have a lot of great flexibility. And then the last tip, 9, is business cash flow maintenance. This is something that small businesses can do, right? Let's say you have a consulting business, accounting, law, engineering, architecture, and maybe you have some bills coming in, some invoices. Maybe you don't deposit them in the bank last 2 weeks of the year and kind of wait till January to deposit them. It's kind of a gray area because you're a cash basis taxpayer. You only pay tax on what you actually have in the bank or what you've actually earned. And the question is, have you earned it if check's sitting in your drawer? So, that's something to consider. You can talk to your tax professional about it. But some companies will do that where they'll kind of zero out their gains and their losses so they can kind of have some flexibility on their P&L position and then maybe deposit some of that cash in 25. It's also, I have some clients that will prepay rent, right? They may prepay rent for 25 and end of 24 to increase deductions to reduce taxable income. Don't forget to subscribe. Keep coming back to this great channel because there's amazing on various self-directed retirement and tax topics. That's it. I want to wish everyone a happy, healthy new year. I hope everyone's having a great holiday season. Thanks for making 24 an amazing year. I hope you learned a lot from these videos. I know I had a lot of fun doing them. And excited for 25. I've got a lot of great, amazing ideas, a lot of awesome self-directed retirement content on the way. So thanks again for hanging out. Really appreciate all your support this year. God bless all of you. Have an amazing holiday season and Happy New Year.